What's up, guys? Happy 4th of July weekend. Hope you're enjoying the extra day off work. This is my Sunday prep. It's going to be the first one we do via video, and we just think it's going to get more engagement. The prior ones were all written with visual charts to go along with it, but the end user, I think, is going to benefit more from being able to watch the video. So I've been on vacation, been away from the markets for almost a full week, and wasn't looking at charts. It's actually the first time I've been away from the market for this long, in as long as I can remember. Took the family up to the beach in the RV. We camped out for a few days up there, and since I've come back, it's been a great mental reset. I'm feeling really fresh. I'm looking forward to Tuesday. It was kind of funny to pull some charts up when I got back and see like some of the things I missed, because some of the stuff was like mind-blowing. But let me just first, since this is the first one on video, I'll just lay out basically the format, because I have a certain format I stick to just because it works best for me, right? I always dissect the broader market first, so I'll go over like the S&P and the Nasdaq and some Bitcoin stuff just so we know what's happening in the crypto space. Then I look at sector strength and weakness, and then I get into the trades, which are broken down into four main categories. The long setups, the two categories for the long setups are strong stocks that I'm looking to join trend and get involved in a continuation trade, or the other long setup is a oversold reversion type setup. And for the shorts, it's the same thing flipped, right? So looking for weak stocks to join trend for continuation lower, and I'm looking for overbought stocks that have gone way too far, too fast, and I'm looking for reversions on those. So those are the four types of trades. Before we get into any of that, though, a little housekeeping as always, the disclaimer. So I or TrueTrader are not licensed dealer brokers. I'm not a licensed financial advisor. Anything I say is for educational and informational purposes only, and none of it is a solicitation to buy or sell a stock. The stock market is inherently risky. You must understand those things. Now that that's taken care of, we can start getting into some charts. Obviously, right now I have the ES up. If you prefer the SPY, you can pretty much apply anything I say about the ES to the SPY. I just prefer the ES because it's less of a gappy chart. And this is one of those stocks that, or one of those things that when I got back from vacation, I was like, wow, that's quite the move. We are starting to get extended from the 20-day. And the further we get extended from the 20-day, the less you're going to see me wanting to put on longs, like at least starting new long positions. The more I'm looking probably to fade things that get extended or are pushing into resistance. If we were to retrace, the first levels of support for me are kind of going to be the 20-day. You have the 50-day down there as well, and there's some pivots down there. There isn't really any resistance I'm seeing until about 4,400. And if we shove up there, most of my trades are probably going to be to the short side on things that are looking a bit extended. The Nasdaq it's been pushing too, and the thing is, it's pushing, and yes, we're getting extended from the 20-day. It's just not as extended as the S&P is. Remember, that can change on a dime. It wouldn't take much for the tech sector to catch a big bid and get a big old push and then start looking a bit extended. I don't see any upside resistance on this till about 15K. We have some pivots up there, and then there's below we have the 20-day and the monthly pivot, both right in that 14,200 area, 14,200. So those are the levels I'm looking at on those. But both the S&P and the Nasdaq, the bull trend is intact. Things look healthy. Just remember, when we have these pullbacks to support, you get everybody running around like the sky is falling, and it's really not. It's really just a healthy retrace so that a trend can continue higher. You can't just have things go straight up. They need to take breathers. They need to have retraces. So next time we have one of those and everybody's running around acting like it's the end of the world, stay objective. Remember, it's just part of the healthy part of a trend. So here's the Bitcoin chart. And what I've been saying about Bitcoin for the last few weeks actually is that this sideways action is healthy, and that we actually, in my opinion, I think it needs to go sideways a bit longer before we can have any sort of meaningful move out of this like base that it's starting to build. We had a hell of a run, right? And so far, a pretty decent pullback. But we pulled back to some support, and we're just kind of channeling. And honestly, if we had had this pullback and then bounced immediately, I would have said that there's no way that this is going to go back to highs or continue an uptrend. I would think that any bounce that happened right away was going to be a short if we had to push back into that 48 to 50K level. But we didn't. We've just kind of channeled sideways, and I think this is healthy. I think the longer we go sideways, the longer we build this base, the healthier this gets. And then we can actually talk about the possibility of maybe this uptrend continuing eventually. And it could break down too. You know, we could go sideways for a while. Usually when you get a nice long base, whichever way it does break has some follow through. That's what's nice about long, healthy bases. So those are the broader markets, right? And then the next thing I always do, guys, is look at the sector strength. And I've been using barchart.com, which you can see here. And I've been kind of telling people about this because it's free, right? And you can pay for something like MarketSmith, which we were using for a long time. And I was like, dude, you know, not everybody has access to MarketSmith. It was $150 a month. And I thought, you know, there's got to be like some sort of happy medium out there where it's like you can get some of the important features of MarketSmith without having to pay $150 a month. That was when we found barchart.com, which is awesome. You know, it basically lets you see the sector strength and sector weaknesses. It does not have all the cool features that MarketSmith has, obviously. That's part of just using a free service, okay? But for the sake of our Sunday prep, I've been just using the screenshots from here to show people the top sectors and the bottom sectors by industry, right? So if you come here and you sort this by this column here, you're going to see what sectors have been performing well. And then if you just click it again, it'll reverse that sorting and you'll see the ones that have been performing poorly. The reason this is important is because it shows the institutional money flows. Institutional money flows into stocks that are performing strong, and they're actually the money that's coming from those institutions is what creates that strong performance in the sector. Vice versa, if a sector is not performing strong, it's because no institutional money is flowing into those sectors. So as far as like my ideas go, long, short, whatever, if I'm looking to get long something, I want it to be in a sector where the institutional money is going as well. And if a sector is performing poorly, I might take a second to pause before putting my capital at risk on a long idea where institutions are like not touching it, right? Or I might even say, look, these are poorly performing sectors. Are there any stocks in here that offer good short setups? So that's how I use those things. And from there, we're going to get straight into the trade ideas for the week. And so the first portion is the long setups. And like I said, we start with the strong stocks where we're looking for continuation. So one of the things I like about TradingView is it has all these different watch lists I can create and keep things separate. You'll see a lot of these names in here, these are from prior weeks' preps. The first idea for this week particularly is the IBM idea. And I know as soon as you see this chart, you probably think to yourself, like, how is that daily candle on Friday put a name like this on the strong stocks looking for continuation chart? It's the simple answer is to zoom out, guys. So if you look at the weekly chart, we have been in a nice uptrend since pretty much early this year, and we tested a long-term downtrend level that we breached, right? And at this point, you know, we breached that level, and we're really just kind of pulling back to some support here. We got the weekly 20 SMA, the weekly 200, and you have all this prior resistance, which we're going to watch to see if when we pull back here, if it does, if that becomes support. So that 136 to 137 area is what I'm interested in. I would love it if Tuesday morning it just flushes out, you know, any last remaining longs that, you know, thought the bottom was in Friday, shakes them out, flushes emotionally down to that 136 to 137 area, gives me the opportunity to scoop up the weakness, and then gives a nice bounce. And you can also see, well, and like the other idea is this. So it may not flush out, right? We may gap up. You never know. These are all if-then statements. That's the way these Sunday preps have to work, right? But if this thing doesn't want to flush out, if it wants to start putting in some higher lows, I still would be interested in the idea to join trend. Now, the other thing you'll notice is I have an alert marked up here over this 152. Let's see, what is the high there? 152.84. Over 152.84, and I will definitely be looking for a swing long on this name to be buying dips. And this is like a longer term idea. I'd probably be putting it in the SEP. And the idea behind that would be, you know, we've had this pullback after breaching this downtrend. I think we get over that level and you'd be crazy to be short this name. That's more further out. I don't think that's going to happen this week. The idea for this week is purely that flush down into the 136, 137 area. So we'll see what we get on Tuesday. The next idea for this week was Starbucks. Friends don't let friends drink Starbucks, right? But they will let them trade it. So as you can see, I actually have this written down as both the possibility of being a swing trade and a day trade. So for the day trade idea, I'd love to see an emotional flush down into these this 112 to 112.60 area. You got the 20-day and the 50-day there. One of the neat features about TradingView, right, is it allows you to have this risk-reward long setup visual, which is great. So like for the example here, I've put in a hypothetical $50,000 account, risking 1%, which I actually have done plenty of videos on why I think it's smart to risk 1 to 2% on an A+ setup. You know, a lot of people think they need to be risking a lot more because they want to make more, but the problem with risking more is you really run the chance of blowing up because you can only be wrong so many times before your account gets actually damaged. So if you're risking 1% of a $50,000 account and you were to put the trade on here, if you're wrong, it's under this low, right? And this is just the way I trade these setups. So basically we've pulled back, we pushed up, made a higher low, and we're breaking this line here. So I want to be buying dips into support and risking under these lows. So, you know, if you're risking 500, the risk reward's skewed here. It's almost a 3-to-1 trade, and I love these trades. Like I put on these kinds of swing trades all the time in the SEP, and you know, when there's strong companies like Starbucks, I have a PayPal swing on, Snapchat. There's companies out there where you can put these trades on when you see them set up, and you don't have to babysit them. Literally can just check on them once a week, almost once every few days, and just see kind of where it's at. Does anything need to be adjusted? Basically, it shouldn't have to be, right? Because you know your stop ahead of time. We know where we're wrong. We know where we're right. It's kind of an A or B type situation. You either get stopped out or it goes to your target. How you trail it out after you get to your target, that's a personal preference. But you can see visually here, this setup, it's there, and if it is offered, I probably will put this in the SEP account for a swing. I'll probably day trade it as well. Now, remember earlier in this thing, I said the SPY is not necessarily where I want it to be to start new long positions. But I think if the SPY has that pullback sometime early this week, that's what's going to give us the entry on the Starbucks trade. So if Starbucks was to pull back to the levels I want and the SPY is not pulling back, it's still just continuing higher, I might pause for a little while and see what happens with the S&P first, because I don't want to be buying stocks in a market that is almost due a reversion, right? Due to pull back and reset. So I would be hesitant to put it on if the market hadn't pulled back. But I do believe for Starbucks to actually get back to those levels I want, I think the market probably has to pull back in order to give us those entries. The next idea on the longs for strong stocks looking for continuation is UAL, United Airlines. Beautiful chart. I love this chart. You can see we're pulling back to this longer term trend line as well as prior resistance turn support. And it's also something you'll hear me talk a lot about, the psychological 50 level. I love psychological levels, 10, 20, 50, 100, right? Stocks love to find support or resistance at those levels. So we're really at one right now. What I would be looking for is one of two things: a flush down into 50 to offer some nice scoops on an emotional flush, or you can see I have an alert set up here for over 52, what is it, 52, no, 53.76. Is that what it says? Yeah. Over 53.76, and I'd be looking to buy dips. The only thing I don't necessarily like about it if we just push up over that level is that we're going to go right into the bottom, the underside of the 20 and the 50 day. But That's okay because I'm looking to buy dips. I'm not looking to buy it at the trigger, right? We push over 54. I want to buy dips back into anywhere into this 53 area, risking under these lows and seeing if this wants to finally continue up higher. The weekly chart looks just as good. I love this chart, guys, and I do think this should offer a trade soon. That's it for the long setups because there's no oversold reversion setups that are really grabbing my eye out there this week. I guess you can kind of put IBM into that category with the Friday sell-off it had, but that's not what I mean when I say oversold reversion. When I talk about oversold reversion, I'm talking about something like this Citigroup trade, CAT was one. I mean, we have them all the time. There's just nothing out there this week that really is catching my eye. So that's it for the long setup. So the next category is the weak stocks looking for continuation. Now, I want to preface this with, in this market, stocks just seem to not do anything except go higher. And so it's really hard to find short ideas. And when I do find them, when a stock looks weak and I'm looking for continuation lower, I don't have the kind of time frame or time horizon I do with the long setups. So like where a long setup might turn into a swing trade, that might be where I just let it work. Something on the short side is typically going to be me looking for a day trade, even if I think it's going lower. Unless I get, one, the ability to lock in profits and it closes weak still, then I might swing it. Other than that, though, most of these ideas that are weak stocks looking for continuation are for day trades. So PENN is the only idea I have for this week. And you'll notice, I believe it was on our Sunday prep from a few weeks ago because of this bear flag it was making right underneath the 200-day, right? Every time it pushed up, it was bumping its head right into the 200-day, and it did roll over and break this flag. And what's it doing? It's doing the same thing again with the 20-day. So I actually think, if we come under, let's see, it's 74.30 is the level I have marked, should send us under, it should give us that leg down that can test 72.90. Obviously, we need to break 72.90 before I think it gets ugly, but I do think under 72.90, this thing might come all the way down to 40. But again, I'm not going to be around for that. I'm looking for the day trade on something like this, maybe a swing if it closes weak and I've locked in profits on the day trade portion. But yeah, I do think PENN looks pretty weak here, and I do think that if it breaks those levels, there may be a trade where, and the thing is I'm not taking it on it. I'm not going to short it in the hole. If it triggers, I'm looking for pops to short with some really defined risk because, like I said, stocks only go up, right? So that's it for the weak stocks looking for continuation. The last setup I look for is overbought reversion setups. And we have one. And it was one that when I came back from vacation, I was like, holy shit. It's MRIN, guys. And when I came back from vacation and saw this, because I remember it on this day. And I think everybody was chomping at the bit to get short this name. And then it gapped up and ripped. And I think everybody thought it was a short that day too. It gapped down. I think people thought, okay, backside's in, right? Apparently they caught some shorts off sides, and I can't believe this thing went in the 25s. Now, if we look at some of the intraday time frames, you can get some clues as to what's happening. We're still holding trend. We need to keep in mind that as long as we're holding trend, this can go higher. Now, what do we need to see for trend to break? Well, we need to see some lower highs and lower lows. We need to see some levels fail. As far as what I'm looking for Tuesday, it's basically, and we are going to point out too, every time we've had an extreme push away from this 30-20, it does revert back to it. Okay, so it's not that you can't fade the extremes. You can, but you got to be willing to take the profits when we pull back to those means. And instead of getting stubborn and think we're taking the home run on this because, I think that's what happened, right? We had people that shorted this probably at 16. It came back down here into this 10 area. And instead of locking profits in, they were like, no, we're going to ride this back to 5. And they caught a bid and squeezed them out again, right? Pull back, stubborn shorts holding, squeeze them out again. Just keep getting legs up, right? So what I look for on Friday or on Tuesday is to see if we can break this 19 level and maybe start to roll over. and then short pops with defined risk. And keep in mind that if we come back down to this trend line here and start to hold, or start to hold other levels, we need to just be ready to lock in and possibly reassess, because until it starts really losing some of these other levels, I mean, I really think that that people are getting way too anxious to swing for the fences here and look for the home run, when there's a lot of trades here to take. You could be making a lot of money on this without having to go for the home run every time. So we'll see what happens on Tuesday. I would love to see this thing get an early push that stuffs and then breaks down under that 19 level, and then from there maybe look to short pops, like I said, with defined risk and not getting too stubborn on it. That's it for the list. There's plenty of other stuff on my watch. These are just the ones that were the ones that made the list. Make sure you guys let me know if you like the video format. If you have suggestions you think that could make it better, please drop them in the comments. Let us know, because we're going to keep doing it with the video. And our end goal is to make it as good as we can for the end user, you guys. So enjoy your 4th of July, guys. Stay safe. I'll see you at the markets on Tuesday. Bring your game face and be ready to crush it. Peace.